Hello, welcome to the European Open briefing for Tuesday, April the 11th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So it's another relatively quiet day. Trading volumes are, of course, being affected by the fact that it's a long Easter holiday weekend later this week. But apart from that, we have, of course, quite a bit of risk aversion in the markets. And although yesterday that risk-off had eased a little bit, it's back on again, so there's reduced risk appetite. This morning, the dollar is down against the yen, and treasury yields are weaker, while the yen is benefiting from safe haven demand. Although against other currencies, the dollar is not doing too badly, and its broader measure, the dollar index, is steady. The euro, though, is struggling at 1 month lows, and that's mainly down to the latest polls out of France that are showing that Le Pen is once again edging higher, being ahead of Macron in many polls. In the UK pound is doing a bit better than the euro. It's up ahead of UK inflation data out later today, while the Australian dollar was lifted by fairly strong business survey data, the NAB business conditions and business confidence indexes. In commodities, oil is at fresh 5-week highs, and that's mainly due to the increased tensions in Syria. And we also have disruptions at an oil field in Libya that's also helping oil prices. But let's begin with the dollar-yen pair. Here in purple we can see the 10-year yields on US Treasury notes. They've been steadily drifting lower this week, and that's mainly due to not so much down to changes in expectations about Fed rate hikes, but mainly due to increased demand from safe haven flows at times of risk aversion. US Treasury notes come in demand. So if the price of US government bonds goes up, the yields go down, and that drives the dollar lower against the yen. And the yen, of course, is itself a safe haven currency. So that's why we're seeing this downtrend in both US yields and dollar yen, which is currently at 110.50. And the reason for that risk aversion is, of course, there's still the risk that the US may carry out further strikes against Syrian targets, and there's currently there's going to be a G7 meeting to try to get Russia to withdraw its support for the Syrian regime. So that's an ongoing development, and that's why we're seeing a continued risk aversion in the markets. But also we've got other developments happening in Korea. North Korea is of course always threatening to carry out further missile tests, and of course the US and the rest of the global community don't want North Korea to obtain nuclear missiles, and the US is sending warships to the region as well as an aircraft carrier. So all of that is heightening tensions, and it's mostly affecting the Korean won, which has appreciated by around 2.5% against the US dollar since the beginning of April, while gold is benefiting from this risk aversion. Is currently up at $1,256 an ounce. That's near 5 months highs. And the dollar index, here we can see that although against the yen it's been drifting lower, against other currencies it's mostly steady at above 101. We had Janet Yellen speaking yesterday. She was very upbeat about the U.S. economy. She said the U.S. economy is healthy, and reiterated the fact that the Fed wants to be ahead of the curve and not behind it. She didn't really add anything new. She just reinforced the expectations that the Fed will continue to raise rates at a gradual pace. And she also didn't mention about the Fed's balance sheet, which was mentioned in the FOMC minutes. Moving on to now European European currencies, the euro, as mentioned, is being pressured by the latest French polls, which are showing the far right leader Le Pen moving ahead of Macron. Macron had been doing rather well more recently, although now he appears to have lost some of those gains. And of course, given if it's a tight race, we cannot rule out any surprises. And as the election day approaches, at least the first round election day approaches on April 23, anything can happen. So we're likely to see the euro coming under further pressure. We can see here in the chart in yellow, it's currently trading around 1.058 against the US dollar. The pound, though, is doing a bit better. It's managed to move back above the 1.24 level. We've got inflation data, and even though the Bank of England remains dovish, despite inflation rising above 2%, the pound is fairly steady for the moment, at least. But UK inflation data, and of course tomorrow we're also going to have unemployment data. That may change sentiment for the dollar, for the pound, either way, depending on if we get any surprises or not. Looking now at the Australian dollar, which hadn't been doing too well recently because Aussie is very risk sensitive, and given the risk off, it actually was pushed to 3 months lows yesterday of 0.7475. Weaker iron ore and coal prices, which Australia exports, also affected the demand or sentiment for the Aussie, but today it has been lifted by strong business survey data. The NAB Business Conditions Index rose to a 9-year high in March, rising from 9 to 15, while the NAB Business Confidence Index, although it was down a little bit in March, this was still near its long-run average, so that's helped the Aussie move back up the 0.75 level. And the Canadian dollar, another commodity-linked currency, it's also doing a bit better. It's being helped by higher oil prices. USD CAD has dropped to 1-week lows, which means the loonie is at a 1-week high. And oil is also worth mentioning that we had positive jobs data out of Canada last week. That's also giving underlying support for the loonie. But in oil prices, that's the main contributor to the loonie's gains. It hit a 5-week high yesterday on the back of the increased tensions in the Middle East over Syria, but also we have got oil field shutdown in Libya. That's helping support oil prices higher. US crude is currently just above $53 a barrel, while Brent crude is at $56 a barrel. That's near 5-week highs. And finally, today's economic calendar, we can see we already had the Australian confidence data. We've got UK inflation data coming up. Headline inflation is expected at 2.3% year on year. We're going to have the ZEW Economic Sentiment Index out of Germany. That's also closely watched, as well as Eurozone industrial production data. But it's going to be a quiet US session with the JOLTS job openings likely to be the main attention, the main data to attract any attention. That's it from me. Thank you very much for watching and have a great day.